Okay, so this is the 2019 mock exam paper question 2. This question, I would like to test whether your knowledge of accrual and prepayment. Yeah, we have learned this chapter on Form 4, and it's mainly talk about for the prepayments, no matter prepayment revenue or prepaid expense, we have to less in our income statement because the cost we paid for is for next year, so that we call prepaid. Okay, and for the accrual, because we have to pay it but we haven't paid, so we have to add in the income statement for accrued expense and accrued revenues. For the treatment of statement of financial position, remember prepaid expense and accrued revenues are current assets, and the accrued expense and prepaid revenue are current liabilities. So before we learn this one, we have to know that using T account to enter the accrued and prepaid expense or revenue. So this question will teach you how to enter the expense and revenues in T account. So let's see the questions. Okay, in question 2, Yo-Yo Company is a consultancy firm in Central. The financial information extracted as at 31st of March 2014 was as followed. We have prepaid insurance 8,000, prepaid consultancy income 10,000. Okay, and the question asks us to show the entries for the year ended 31st March 2015, which means we have to include all expenses and revenue from the 1st of April 2014 until 31st of March 2015. So all revenue and expense related to this period should be the cost that we have to enter it as our profit and loss account. Okay, so let's see. Okay, actually we have 3 accounts: consultant income, which is revenue account, so we less in credit and increase in credit. For rent and insurance, we increase in debit and decrease in credit. Okay, so for the prepaid insurance and prepaid consultancy income, okay, these are the balance brought forward. Okay, so let's see prepaid insurance. We have balance brought forward, and for the consultancy income we have in 2000. Okay, so let's see the first additional information. Insurance was paid by check in 2 installments on 1st of July 2014 and 1st of January 2015 as followed. So actually we have actually paid $50,000. Okay, so for the insurance we have to record our bank account Okay. $50,000. And if we look at it for the 23,000, which include until, that means from July to December 2014, which include in our accounting year, so it's included, all costs included. But for the $20,000, we only include from January to March. From April to September, it will be our prepaid insurance. Okay, so we have to make a balance carry forward, which is the prepaid insurance. So the 6 month will be 1018 because we have 27,000 times 9/6. So for the remaining, we have the profit and loss account. Which is 40,000. Okay, second, the company received consultancy income amounts to $1,566,000, of which 45,000 was the deposit for service to sister company. The consultancy service will be provided on 15 April. Okay, so for the consultancy income, we have received it 1 million. So bank, we have received 1,566,000. Sorry, this side. Because we received the money, it is our revenue. So revenue increase. Of which 45,000 was the deposit for service. Okay, for the deposit, this is our prepaid. Prepaid. So we have profit and loss. So for the profit and loss, we have 1,531,000. So for the rent, the company has entered 2-year tenancy agreements starting from October 1st, 2014. Monthly rent was $48,000, and the company was entitled to 2-month rent free in October and November. The accountant paid $336, including 2-month rental deposit. Whole amount have been recorded in the rent account. Okay, so first we record the bank because we paid 336,000 already. And we have rental deposits. For the rental deposits, we have 96,000. And for the profit and loss, okay, because this is a 2-year agreement, so actually we have to pay 24 months as a rent, but we only paid 22. And now we have included from October to the March, so we have 6 months. And therefore, the profit and loss is. And finally, we can find the balance carry forward. Okay, so remember the balance carry forward is the prepaid expense or prepaid revenues. Okay, so I hope you may learn from this video. Thank you.